Let's turn now to a key player in the reshoring space. As I mentioned, Prologis, shares of the logistics company up as much as 5% today after posting a slight beat on the bottom line. Revenues fell over year, but they did raise full-year guidance, saying a dwindling warehouse pipeline and growing demand for AI infrastructure should boost profitability. Joining us now is Prologis Chair and CEO Hamid Moghadam. Hamid, it's good to see you.
Nice to see you as well.
So what's the AI play here? Just I think about you guys as like an e-commerce, like you do e-commerce, your warehouses. What's the AI angle?
Well, there is an AI angle that I'll get to, but we are in a much more basic business than that. We basically almost 3% of global GDP goes through our buildings in 20 countries around the world. And our facilities are the infrastructure that supports consumption. So pretty much everything in your studio, whatever you're wearing and all that, at some point in its life, its journey would have gone through one of our facilities. We are not an AI play to the in a pure play way of thinking about it, but we do have a very active business and growing business in data centers. And a lot of the logistics properties that we have and a lot of the land that we have lend themselves to data center development. And we've got a number underway, and we expect that business to grow rapidly. And of course, that's fueled by AI and other things.
So are you yourselves becoming a data center, a company with a data center business, or do you just focus on maybe having the asset and having someone else do the build out?
No, we actually have the land. We get the entitlements. We build the buildings, and we lease them to users of data centers. So, yeah, we continue to own them over the long term.
And what portion of the business is that now? What would you expect it to be in maybe 5 or 10 years' time?
It's a very small portion of the business today. It's less than 1%, but it's likely to be 10-15% of the business going forward in terms of impact. We're not sure. We haven't made the decision whether we're going to keep all of these data centers on our portfolio or that we're going to just develop and sell them as we go along.
Right.
It all depends on the capital requirements of the business as they evolve.
So interesting. So also, this has been a unique moment for the company because we had this huge surge in e-commerce during the pandemic. Now we're on the other side of that. Stock's holding up okay, though. So what seems to account for that? I mean, how can we have kind of volumes that still look decent? We talked about your full year outlook at a time when the consumer and many of the best pandemic industries are still in, maybe we say decline or adjustment.
Yeah, so let me give you some numbers. Before COVID hit, e-commerce represented about 15% round numbers of U.S. retail sales. And at the end of the pandemic, it was about 25% of U.S. sales. So it took a 10-point jump. Really, we got 10 years of growth in about 6 months in that business. Wow. And it declined a little bit down to about 23% after the pandemic as people started spending money on experiences and travel and all the other things other than consumption of products. But it's now rebounded, and it's growing off of a much higher base. So this narrative that e-commerce has gone away is crazy. I've never understood that. Sure, it's not jumping by 10 points every 6 months, but it's still growing off of a much bigger base than before. And the relevance of all that to our business is that e-commerce takes 3 times as much warehouse space as bricks and mortar retail does.
I see. Well, that's a huge secular shift. And really a pull forward that now leaves us on a permanently higher plateau. Hamid, you've guided this business through many a cycle. It's very interesting to hear about how AI may be part of the next one. Thanks for your time today. We appreciate it.
Thank you.
Hamid Moghadam from Prologis.